Joining me now is Cremen from Adviceworx to share her analysis on the day's market performance. Caroline, thanks so much for your time today. It's been a busy week, right? Really, those EU-US tensions hogging most of the headlines. We also had some earnings coming through, economic data, GDP out of the US coming in at 4.4% in Q3. How have you been making sense of everything? Of course, as the geopolitical uncertainty lingers on.
Yeah, well, I think that it's probably going to be the story of the year because, the economic stats that are coming out, show probably despite a few questions towards the end of last year that the US is actually still looking relatively healthy. Consumers are healthy, consumer outlook is healthy, the confidence levels are healthy. So, that will probably take a bit of attention off really what is happening in the underlying US economy as a whole, with probably a bit of focus on interest rates. Inflation is still a little bit out there. So I think this year, and certainly this first quarter, we really probably would hope to be different and boring, is going to be the geopolitical outlook because, to be fair, the drop that we saw earlier in the week really was fears about Greenland. Just completely came out of the blue. We'd already seen some weakness, especially in some of those, those AI sectors from the end of last year leading into the beginning of January. Then you get something out of the blue, and I think people kind of have fatigue. You had tariffs, you had all different types of things coming out, and then you have some very, very arbitrary issue to most people. Becoming the focus, potentially breaking up NATO, potentially driving a greater wedge between Europe and the US. And these are your true black swan events. They are very, very difficult to predict. So I think this is where it's going to drive. That's why you're probably seeing markets a little bit weaker today in the US, despite the fact this is all kind of pushed under the rug. It's because people realize that there is now a risk in your predictions. And they need to factor that risk in, and that risk is going to be to the downside, no matter how okay, the economy is and how well companies do.
And while relations seem to be okay, we can't forget that trust has been broken, and that will consistently and always remain, right, when it comes to bilateral relations with these countries.
Yeah, I think, the trust has been broken. It's a Trump issue. I don't know if it's necessarily a US issue. And people are probably just biting their fingernails and waiting for the next 3 years to be over. And in a way, when there are these big pronouncements, you often don't get too much of a reaction. People kind of just roll their eyes and say, well, it's Donald Trump. So the beginning of the week's reaction was kind of a bit of a surprise because the markets have shrugged off a lot of, really egregious things that have actually happened.
Yeah.
So, the trust thing, I always say, people go for economics and what suits them best. And, where the money goes, that's where the markets will go. And we're probably in kind of an area of now real politics, It's just, there's going to be political interference. People are going to price it in.
All right. Let's move over to another theme that seems to be one to watch in 2026, and that's independence around central banks, the Fed in particular, right? We do have the Fed meeting this coming week, and just taking into account the data that we've received, right? There have been expectations for a pause. Do you share the same sentiments? And then perhaps we can also get into your expectations for the SARB as well.
So I kind of do think we are going to get a pause. I think you're definitely seeing a lot of commentary, especially at the end of last year, that inflation in the US is sticky. Also remember, leading up to the end of last year, you had that period where they weren't getting economic data because of the government shutdown.
Yeah.
So there was a bit of a towards the end of last year. So I think it really is too soon in the year to actually make another rate decision. And I almost think that maybe there is a slight political element there as well, because of the pressure that has been put on Jerome Powell by the potential prosecution of Jerome Powell. We know he's going in May, but I think, is it possible that he might think that if he reduces interest rates, people will perceive it that he's trying to placate the president? I don't think he personally would do that, but I'd be surprised if there's a rate cut. It'd be welcome, but I don't think it's happening. On the SARB side, I also think it's probably a little bit too early in the year. I do think they're still going to digest a lot of things, especially where the rand is and going. And they'll probably make that call a little bit later, although I'm not an economist, so I stand to be corrected, but I just think there's just too many moving parts in the world at the moment for central banks to make big changes.
I mean, from some of the expectations I was reading, many economists pegging a cut in March and not necessarily next week.
I think that's much more likely, and probably looking at 50 basis points this year. But like I said, way too early, and this year has started way too in far too a weird fashion to be making big decisions right now.
All right, we don't have time to get into any of the company news, so I'll go straight to your stock pick. Where are you seeing value at the moment?
I'm going to see a Donald Trump trade here, and where I'm seeing value is in Visa now. If you've been watching Donald Trump, what he did threaten to do was he threatened to cut interest rates on credit cards. It went from 24% to 10%. And cut transaction fees, and immediately that whole market went backwards, including Visa, which has had a very, very good run up to now, but is down 7% for the year. Now, Visa doesn't make money from the interest rate. That is done by the issuers. Okay, so Visa is still going to get its money. 65% of its business is, in fact, debit cards, not credit cards. So I think it's always been a difficult stock to get into because it always trades at a very, very rich value. But when you get an opportunity like this, and Donald Trump does give us opportunities, you need to take it and add this one to your portfolio.
So Visa, one to look out for. Caroline, thank you so much for your time and taking us through trade this evening. That was Caroline Cremen from Adviceworx.